There is one setup that happens every day. It is so easy and very consistent, and the reason I can make such a consistent profits in the market. And today, I'm going to take you through all the simple steps so you can do the same. So let's get into it. So just before we start with the video, I want to show you my results for the last 2 months. So you can see right here, $36,000, and of course this may not be hundreds of thousands of dollars like your fake demo gurus out there, but this is true honest results from a 19-year-old from of course a verified tracker. Also, one more thing I want to show you is my channel, other channel, where I basically show my wins, my losses, every single trade I execute in the live market. So if you want to check it out, because trust me, you can learn quite a lot from this channel, you can go down there. After this video is gonna be link in the description. So basically, with all of it being said, let's just head into the video. The first thing I want to do is I want you to look at this picture right here, and I want you to try to spot a setup. And trust me, you are not gonna be able to, but in about 3 to 4 minutes, when I explain you everything and basically how we are gonna look at the market with which confluences, you are going to have a perfect picture of the market. So let's go on to the confluences. So the first thing I want to show you is the fair value gap, and I'm not only gonna show you what it is, but I'm gonna show you the whole logic behind what even is fair value gap. So first thing, how do we spot it in the market? We need to have 3 candles like this in total, and basically after we have that, we want to look for this open space in between. So basically this is what is called a fair value gap. I'm also going to show you an example right here. So let's say we have this fair value gap in the market right here, because 3 candles between first and the third candle there is space open. Then we also have this fair value gap, and it's basically pretty simple. So let's continue with explaining. So how are we going to basically use this fair value gap right here? So let me show you this example. Let's say market is heading to the upside like this. It is creating basic structure to the upside, just a normal uptrend. And what is basically market doing when it's going to the upside? It is going to leave imbalances like this in the market, and basically what is going to do, market is always going to need to rebalance and basically go down, and it is quite a lot of the times going to retest exactly fair value gap. Why? Because fair value gaps are basically imbalances in the market, and when they get retested, market rebalances, and they basically fill that spot in between those candles. They basically made a hole in the market. So that is going to be the first way we are going to use fair value gaps, for a basic retest like this in the market when we come down and basically retest the fair value gap. The second way we are going to use the fair value gaps is basically when we want to enter the time frame. This is going to be done on a way smaller time frame, so we basically wait for the market to disrespect the fair value gap that is basically going against the trend. So if the market wanted to reverse right now and our entry wouldn't be valid, is basically if we come up to this fair value gap right here, and if we manage to reject from it, then this would maybe indicate us that market is either going to change the trend, or market is just not giving the entry at this exact moment. But if market manages to make it across here and actually close the candle above this fair value gap, that is going to indicate us that we want to enter basically the market right here. We want to put a stop loss below the low and target this high right here following the trend. And what is going to happen a lot of the times, you are just going to have beautiful price action towards this high right here. So now the second confluence we are going to use after fair value gap is liquidity, and let me basically explain you and run you through what is even liquidity in the market. So you probably heard what it is a lot of the times, but let me explain it so clearly that you just understand actually what liquidity is, because you probably know that a lot of people told you that these highs and lows are liquidity, but probably nobody told you why are they even called liquidity. So let's say market is creating structure to the upside like this. Basically what is going to happen in between the market? Why is market making structure to the upside? Why is it making these retests and these pullbacks? So basically what happens is market, when it's going to the upside like this, making push to the upside, at one point market runs out of fuel. So market can't just pump out of nowhere and just continue pumping, because there is nobody on the other side of the market. So if there is a lot of buyers to the market like this right here and just continuing the uptrend, there comes a point where there is nobody who wants to sell the market. There comes a point where nobody wants to buy the market because the price is so high, and basically the price becomes so high that people start selling the market. So a lot of people right here start to sell the market because price of the market right now is too expensive, and of course as we know it, this is going to be against the overall trend. So they're going to try to sell the market all over here. And of course, where do you think they're gonna put their stop losses? It's always gonna be at the most recent high, exactly like this. And basically what happens is after market pushes the price enough to the downside, what is gonna happen? The price is again gonna become good and cheap, and people and institutions and banks are going to start buying the market again like this. And of course, where are they going to put their stop losses? At the most recent low. And what does this basically tell us is that the market is going to have a lot of stop losses right here and right here. And basically what does that tell us is that at these stop losses, market is going to have basically a lot of money, I would say, parked. And if market wants to, let's say, take this money, collect that money from all the retail traders, and basically 99% of the traders like us who are actually losing money in the market, because a lot of people are just uninformed and cannot make money by themselves in the market. And basically what do? They always fall for these kind of traps. And what the market is going to do, it is going to basically come up, sweep these highs, and basically what is it going to do too is come down and sweep the lows. And what we are going to see is that market is going to come down and retest some kind of fair value gap, and we are going to know that this right here was not some kind of break of structure, but it was actually manipulation of the trend. Because how are we going to know it? Because we are going to wait for the specific entry right here that is going to be a disrespect of the fair value gap. And if this was to be a valid some kind of break of structure, market is never going to disrespect this fair value gap right here, because it is just going to actually come to it and continue to the downside, and we are never going to get the entry model. But quite a lot more times we are going to actually get the entry model up here, get a closure, and this is going to be their entry right here that got stopped out, and their entry right here that got stopped out, and we are going to enter the market right here, stop loss below the fair value gap, and target the actual liquidity that we left up here. And that is always about 85% of the time going to go beautifully to the take profit like this. So now that we know basically what are we targeting in the market, let's go on to the actual real examples. So if we look at the market right now, you can see that we had quite a huge push to the upside right here, and basically market came to this price and started slowly selling off, as you can see. And basically what the market wants to do, it is pretty clear, it just wants to continue the trend to the upside like this. And basically what do we need to see in the market? We need to see some kind of manipulation and some kind of retest of a fair value gap. And where do we want that to happen? Of course, if you want to look for some kind of longs like this, we want to see market manipulate to the downside and basically retest to the downside. So what do? We are going to mark out the fair value gap on a 15-minute time frame. As you can see, I like to always do it at a 15-minute time frame, and we are going to mark out this obvious low down here. And I just want to mention that this works for literally everything, for gold, Bitcoin, NQ, all the pairs, everything, because this is the logic of every single market. So after we actually mark out everything like this, we want to basically wait for the market to come down and go and sweep this liquidity. So let's go actually to the lower time frame and wait for it. So I'm gonna wait for it on the 1-minute time frame, and as you can see, we just came so close to it. I'm also gonna make this wider like this. So let's wait for the market to sweep this liquidity, and there it is. So we swept the liquidity, we retested the fair value gap down here. So what is gonna happen right now is we need to wait for the entry model, as I told you guys. So what you can see right here is we have a fair value gap right here, so you can see the hole in the market. I'm gonna get rid of this so you can see a beautiful hole in the market. But the thing that happened here is we have two fair value gaps just next to each other, so we are going to mark them out both, because something very tricky can happen that can make you lose some trades. And if you play the market forward, let's see what happens. So market actually almost closed above it, so this would not be entry because we just wicked above it and did not actually close above it. And let's play the market even more. So what happened actually in the market? As you can see, we actually tapped into this fair value gap above. So if we tap into the next fair value gap above the last fair value gap of the leg, we actually want to see both of them get inversed at the same time. So we are looking for the closure above this level right now. So let's wait for the market to actually show us something, and there it is. We had the closure above the actual second fair value gap. So if you want to enter the market, we market execute at the closure of this candlestick. We put our stop loss somewhere below the fair value gaps, and what do we target? We go to the upside and we target some nice liquidity. So we can, like, say for example, target this biggest liquidity right here. You can also target this liquidity. It doesn't really matter as long as it's a logical target. So let's make the TP, let's say we say target like this, and let's play the market forward, and you can see we hit the TP perfectly to the T. But before we go to the next example, I want to show you a little execution trick down here. So if we want to make our trades a little bit more advanced, we are not going to be stuck on a 1 minute time frame for entry. We are going to shuffle between 1 minute, 2 minute and 3 minute time frame. So note the fair value gaps right here. We have two fair value gaps, but if we go to, let's say, 2 minute time frame, so I'm gonna replay the price. We are gonna go to 2 minute time frame. Look at what do we have here. We only have this one fair value gap right here. And if we want to execute from, let's say, the 2 minute time frame, because if we go to the 3 minute time frame, we have no fair value gaps at all. So you can see we can only execute from the 2 minute time frame, not from the 3 minute time frame. And let's wait to see how do we get the entry. And you can see that right here we have a close above the fair value gap, and if we put a stop loss at the same spot as the 1 minute time frame and target the same spot to the upside, let's see the difference between these two trades. So the 2 minute trade, you can see right here, if we risk $1,000 with some kind of $100,000 challenge, which if you don't know which prop firm to use, you can go down there and check out which prop firm I use with, of course, the discount code. If you would to risk $1,000, which is very easily achievable with $1,000 account, you would have made $7.3 thousand with this trade. And if you were to risk the same amount on the 1 minute trade, you would have made $4.16 thousand, which is of course still great, but trust me, every single day of the week I would want to make this much rather than this amount of money. Okay, so let me now show you this a little bit more advanced of an example. So let's say you came to the markets right now and this is what you see. First thing we are going to do, we are going to mark out the fair value gaps. So look at this, we have this fair value gap right here that was respected. The next thing we can see right here is that we have this fair value gap right here that was disrespected. So what is market telling to us? So basically it came down, retested this fair value gap, and it came up and disrespected this fair value gap. So basically market is clearly showing us where it wants to go. So what we can do now is, let's say, scale a little bit more to a lower time frame, let's say 5 minute time frame, and look at this. We already have some nice thing to see here. So after we disrespected this fair value gap, you can see that we left a fair value gap right here, and we have some liquidity points, for example this one right here, and it looks like this right here is nice liquidity points. So let's see what the market is gonna do. And I just want to show you this because some days you're not gonna get as clear setup as the last setup we had. Some days you're going to have to use the logic of the actual market to catch the trade. So let's see what happens. So we do get the top into this fair value gap, and look at this, on the 5 minute time frame we actually have a beautiful entry. So let's try out if we inverse this entry to the upside, how is it gonna play out. So let's see if we are going to close, and there it is, a beautiful closure above this fair value gap. And where do we want to place our stop loss? We can place it either here, or under the low. I always want to go somewhere in the middle. So let's say under the candle like this, because here sometimes you can get stopped out and here your risk to reward goes down a lot. So I always place it somewhere in the middle, and I always try to target, let's say, like this or like this, it doesn't really matter. So let's say we target this, and let's say if we are going to see if we hit all the way up here. So let's see what is going to happen in the market. So beautifully hit the TP1. So let's say if the market is going to go all the way up to this high or it's not gonna, and yeah, there it is, beautifully all the way up to that high. So if we were to target that high, and we would have made $4.16 thousand, which is absolutely amazing. But I know your question is gonna be, what if we entered off of the 1 minute time frame here? So let's scale down all the way and let's go all the way back to right here, just before we had this entry on the 5 minutes. So we are going to move this to the side like this, and we basically have the liquidity sweep that happened just now in the market. So let's right now see where do we get the 1 minute entry. So we had the retest of the fair value gap, we have the fair value gap right here left behind. So if we want to enter the market, we want to see a close above. So you can see right here we did not actually close above, so we are still waiting, and let's see what happens. So we still didn't close above, and there it is, a close above the fair value gap. So right now if we were to enter the market, I would of course not advise you to put your stop loss like this, because that is just way too tight and the slightest move from the market can stop you out. So you can either put your stop loss like that if you want to do it, but you can always like give your stop loss some room like this. And let's say if we were to target this huge target to the upside like this on the 5 minute, so if you were to even target this secure target, which would actually be 17 risk to reward, which is, trust me, not going to happen a lot in the market. And let's see if it actually plays out. So you can see it actually plays out in the end, and it actually played out all the way to that TP up there. But I don't want you to have some kind of unrealistic expectations from the market, because this trade is very hard to catch, and of course it is going to be so hard for your psychology to actually hold this trade until all the way up here. And just because you made it till the end of the video, I want to give you this playbook of this strategy for completely free, of course. All you have to do is go down there in the description and just claim it literally, and you are going to be able to follow all the steps inside a playbook to actually execute this in the live market. And also, if you like this video and if you want to see more content like this, you can subscribe to the channel so you can always see the latest video I upload, and you can also like and comment if you have some questions. And there is also gonna be some links down there. For example, if you want to see which prop firm I use or any of that stuff, you can just check it out in the description. And one more thing I want to say to you, if you actually want to get mentored by me personally one-on-one, you can go down there in the description and check it out. So basically, with all of that being said, I hope you enjoyed the video and I will see you in the next one. Peace.